Good evening, everybody. Good morning for some of you. Welcome to Watch My Trading. My name is Karina Fabi. For those who doesn't know me, welcome to our seminar. I would like to know first what cities we have here in the audience, just to know what cities are we getting into. I'll be glad to know that in the panel questions. Great. Good morning for you. So you must be from India, am I right? Quite late for you. Some Spanish speaking here also. Panama, welcome. South Africa, Atlanta, welcome. India, many people from India. I'm so glad that we got to get you some some information out there. I know that for you, it's the options market more common in India, not the CFDs. Canada, Nigeria, Egypt, Brazil, Philippines, welcome. India, Serbia, wow, we've never been there. Never had anyone from Serbia. Johnsenburg, Albania, welcome. All right, we're gonna wait for 3 more minutes to see if we got more audience, and then we're gonna get started right off. Right, so, and as many of you, I started this market understanding and trying to see how the indicators will guide you into trade the market. And after many accounts lost and many stop out over the first year, I went to New York, and that's when I basically knew how to trade the market, and I learned price action right from with, of course, real capital, real money, real stress, real emotions in play, and everything. So I'm sure most of you maybe had that the same path of trying to understand indicators and trying to see how indicators work, and see how those signals will get you with the right path. And let me tell you that I'm sure maybe you're a little bit frustrated if that's your case, because indicators, they basically cannot guide you through the trading, especially if you want to be an intraday trader, and moreover, if you want to be a scalper. And we all know that scalping and intraday trading are we can say, the most flexible way to trade, since you have full control of your capital. You enter the market, you exit the market, and you're ready to go. Furthermore, the advantage of a day trader is that you don't have your floating transactions for long term, even though with the price action you can also have long-term strategies. So that being said, the topic of today, how to identify, sell and buy market areas, will tell you exactly how to manage the risk on your transaction, how to read when you are into a sell pressure area, when you are into a buy pressure area, and how to manage your transactions. So let's get started with a few minutes of introduction first. So I'm guessing the level of the audience is quite good, right? I'm guessing that most of you have between 1 to 10, I believe over 6, right? Am I right? Or somebody here in the audience, or maybe most of you don't have enough experience, and I need to go step back and explain a few things before we go into the buy and sell areas. So I'd like to measure first the audience here, the level 1 to 10. I need to just get a media of yeah, just to get a media of 4 or 5. Okay. So we're good. We're good for the advanced traders. Okay, great. That's all I needed to know. So not too advanced, but not too basic. Okay. Now, since we got many friends from India, I'm guessing that you know that I'm going to use as an example the CFDs type of actives, CFDs futures. I'm not going to use options, because I know that in India most people trade options, and you're not too familiar with CFDs. And for that, I do have a tutorial to explain you the difference between options and CFDs. So if you like that link, let me know, and I put it in the question panel for you. Now, just to get started, like I mentioned before, I'm going to use examples of CFDs. Okay, so let me tell you how we're going to do this, and then we're going to start. because might be confusing if you trade, I don't know, stocks, or you trade commodities, or you trade any other instrument. But let me tell you that this type of analysis is applied to any type of instrument, any type of active that you like to trade. So most India friends, they trade options. You may trade stocks. You may trade commodities. Talking about the primary market. But in this example, because we need more flexibility to explain how to identify buyer's area and seller's area, we're going to be using the CFDs, which is a derivative market, a derivative instrument, and we have many instruments part of the CFDs family, right? We have the FX market, that means the currencies. We have the stocks also, they have their own CFDs. We have the commodities, its own CFDs as well. We have ETFs, right? We have many instruments that of course are part of the CFDs family, which is, of the family of the market. It's like the same of futures, like options, but it's just a different instrument. It's a different product. It's called CFD. So, but again, you can use it. Yeah, absolutely. You can use it with any type of instrument. You can use it, or you can apply this analysis for any other instrument. No, we'd rather use CFDs as an example because, like I said, most people without investment, like, most people that follow us, I watch my trading, we have investments from $3,000 up to $5,000, right? And since it's a good leverage to market, the CFDs, we're talking about 1 to 400, 1 to 200, then that's why we all go to CFDs, because of the leverage especially, and the margin requirements are better on CFDs. So that's why the example I'm about to explain is CFDs, but of course you can use this example on any type or any kind of instrument that you trade. So now this is of course an MT4. This is my personal account. It's one of the accounts that I have. This is the amount that you have here. There's no transactions floating at the moment. So this is all the product that we see that my liquidity provider gives me, right? Over 400 instruments, and they all are CFDs. So I'm going to go ahead and take one example of a CFDs of, for example, euro dollar, right? If you trade CFDs on currencies, then euro dollar is one of the best options to trade on an intraday basis. Okay. So let me go ahead and delete all of this. What you see here, like I said before, this is an MT4. Okay, it's just a platform and technology. There's many other technologies that you may use. MT4 is good for me because I use pivot points, and pivot points is an indicator that I'm able to save into the MT4. And once you save it, it's saved here at custom, and you have it here with the daily formula. The pivot point is the closest indicator that will help you to enter and exit on intraday basis. Now, that's why you see this pivot point in the back, and then these yellow lines for me are just the prices, the highs, the lows, the entry and the exit prices once I enter the market. I don't put any pending transactions when I do a spot transaction, when I buy or sell from the platform, but I do mark the prices with a yellow line. That is right from the platform. I just click here, you put it here, and that's your high. Then you know when to buy, then you know when to sell, and all of that. I do recommend pivot points, and it's the most accurate indicator to trade on intraday basis, because the formula that you see here, it takes the information from the trading session exactly that just passed. There's nothing more accurate than this, nothing more precise than this. The way you trade, well, depending on your strategy, I'm going to give you the insight of how to see when you are trading into buy area and to a sell area based on an intraday trader, but also you'll see how you can trade with the long-term strategies, knowing when you trade in a buy area and when you trade in a sell type of area. So again, indicators, they're not accurate to trade with price action. Price action is just The only fact is to read when exactly one price is to sell and when exactly one price is to buy. There's never one price for sell or buy. There's always one price to sell, one price to buy, and that's it. There's never going to happen that one same price is for buyers and sellers at the same time for an intraday trader. So that means our transactions last floating in the market 15 to 20 minutes. Okay. Now, for intraday trading, yeah, what we do, in fact, what I do, is all my trading sessions are recorded and I put it here in my channel. So here you see this is my channel. Is basically you find it as watch my trading. And then you see the daily report. Daily reports at every trading session that I finish, I record how the market's going to finish for buyers or for sellers. And before euro close, I can know and I can say if euro dollar is going to finish for buyers, if dollar CAD is going to finish for sellers, and what's going to happen. So that is the daily report that you see here. There's also many other tutorials that might be helpful for you. For example, how to start CFDs and what is more advantage of CFDs versus options. And then you have, how to start your map price, how to do your map price when you trade price action, how to start basically price action, and then scalping, and many others that might be helpful for you. Okay, so let me go ahead and back to our topic. Like I said, if you have to choose an indicator, let me tell you that the only one that's going to be helpful for you for an accurate trading is the pivot point. Now, you have to download it and to save it in your platform, in your MT4. Just subscribe here, and then you get, yeah, you will know when I put another video and when I put upload some other seminar here. So yeah, just subscribe, and then this is every day. The market brief is every day. So market briefs are good for you when you do day trading, but also I give an insight if you want to keep long-term transactions. So, it's good to know that you have daily information on the markets. So, yeah, watch my trading. You just find it here. This is our site. Our site is under construction for English, so there's a few things in English, but the most important thing is our calendar. We trade Monday to Fridays, and we trade just with macroeconomic information. So what I bring this calendar here, because it has a lot to do with the topic that I'm about to introduce you. Every time we have information here, let's say for example tomorrow we trade the ADP of the non-farm payrolls, oil inventories, we trade Asia, and we trade also the trade balance of Australia. So tomorrow we trade basically 1, 2, 3 times during the day. We only use macroeconomic information. Yes, only use macroeconomic information because we are day traders and we can be trading the market and be scalping maybe 3, 4, 5, up to 10 entries during these 2.5 hours. Okay, so this market is not accurate to trade over 3 hours during the trading session in the morning. And for us, the morning, it's the opening of US plus the overlap of Europe. This is the best time you can trade. US plus Europe. You get the best volume there to be a scalper and to enter and exit the market. So basically, that's why we have our own information that we consider we have opportunities here to trade. Because most economic calendar will tell you, a medium impact, high impact, low impact. But we know already which information is exactly the ones that we pick to trade. You don't waste time trading information that's not going to generate an impact. And only a trader knows when that's going to happen. So the best information this week, of course, tomorrow we have a great day of trading, and also on Friday for the non-farm payrolls. So what I brought this up, the hour calendar, because it's related into how you manage your risk when you identify if the market is into a sell pressure area or is into a buy pressure area. So for example, I'm going to go ahead and go to now euro dollar. So let me show you how you see this. Okay, so for example, in order to analyze the market, since you need to know the entire year to see when the market has the buy pressure and when the market has the sell pressure, you need to know what's going on with the year. So compared to the trend, most of us, we heard when we started this market, the trend, follow the trend, don't go against the trend, and blah, blah, blah. The thing is that the trend is not actually the trend, because you have three types of trend. You have the primary one, which is the annual trend, and then you have the medium type trend, which lasts 3 to 4 months, and then you have the short-term trend, the short-term trend. And this one is the one that lasts 2 to 3 weeks. Okay. So if you are an intraday trader, you better focus here, the short-term trend. But the thing is, to use the term trend, it doesn't tell you anything. It doesn't tell you that you can buy or you can sell, either on intraday basis or for a long-term strategy. You must focus here in how the market tells you when you have buy pressure and when you have sell pressure. Okay, and that is what I'm going about to tell you, because we knew how to manage the price map, the pricing map, right? When you do price action, you need to know what is the path of the price. And in order to know that, you need to know what is the buy area, what is the sell area. For example, euro dollar. Euro dollar has the buyer's area, the area for buyers. It is from 110 to 118. Okay, so we knew from the beginning that when euro dollar was about 110, we were expecting the price to go up to 118, maybe 118, 19, 120. We knew that from this point on, the only thing to do with euro dollar, it was to buy. The owners of this area, above 110, it was only the buyers. So what that tells you that if you don't want to add any risk into your trading, you better never sell euro dollar once you're above 110. Now, exactly this way I'm talking here, you can apply to every instrument and every active that you want to trade. Stocks, commodities, all of them. Every instrument has its own buyer's area and its own seller's area. Now, what is the seller's area for euro dollar? The seller's area, it is, of course, from 1.9 down to 1.05. This is the seller's area. If you don't want to add risk at your trading, and if you are an intraday trader, then you better go just sell for euro dollar if you are in this area, below 109. You never buy when you are below 109. Okay? So now, how you know this? And let me show you that. First of all, like I mentioned before, you need to get perspective, right? You need to get perspective of the market. So you basically, you just delete all you have, delete all the lines, all indicators or whatever. I'm just going to leave a few points, but you can see the price. There's no lines in the chart that would bother with your vision and perspective. So now, since I have to see the entire year, I need to go to 4 hours just to gain some perspective. So let me show you how you see and how you analyze when you have or when you start with the buy pressure area and when you have a sell pressure area. So for example, euro dollar, you need to gain perspective. You must go down in time, back in time, and see since at least February how the market's behaving. Why since February? Why you don't consider January and February for this market? The basic reason is that January and February in this market are just 2 months where not banking are getting involved in any trading, no funds are getting involved in any trading. Of course, you have volume and you can trade, but most important decisions of the market and most countries that the central banks are taking, that companies are taking, that private investors are taking, and all these 80% of the market start trading seriously from the first week of March. Okay. And January, February for us is not a point of reference when you trade on currencies, especially in CFDs and currencies. or maybe also it applies to gold and applied to oil. Gold and oil also applies for this concept that I'm mentioning here. So for currencies, like again, the central bank start taking decisions for interest rates just in March, and most companies, they start basically investing in March. So this huge volume that start in March. So we consider that our trend, or better say, we consider that our division of buyers and sellers start in March. So I'm going to go ahead and take from March how you see and how you basically get that differentiation. So I'm going to take March, which is here, and then you start putting your lines. You start basically having to put your lows and your highs. So here on March, let's say the first 15 days of March, you have here the 105.32 psychological level 105. Okay, and then you have a high here, basically at the end of March. So March, you have the low and you have the high already, and the high, it was at psychological level 109. 109. Okay, so then there you go, and this is the first frame for you. This is the first frame for you. You have the lows at 105 and you have the highs at 109. So March for you is a huge reference for the rest of the year, the low and the high. The market goes from 105 up to 109, 109 down to 105. So this is your first information that you got. In this particular case, it stopped at 106. But you know, the thing that you must know is that if the market started with a buy pressure in March from 105 or 106, then it's not coming back down below 105, never, the entire year, or at least it shouldn't, unless you have some crisis with the Eurozone. Okay, so that's a huge important thing. Once you have the low in March, it's supposed the market will never go back and never go down those lows. But instead, if it goes through the high of March, then you know that the seller's area is about to expire, that the market is not going to sell from 109 anymore, and that's exactly the point when you know exactly the market is going to have some buy pressure, and very strong buy pressure. So once the market in March got about 109 and you got exactly at the 110, we knew that the new market area, it was about to start. So again, March is your point of reference. You need to get your low, you need to get your high, and then from there you start mapping the rest of the year. No, this of course it's an analytical type situation. I'm not talking about false breakouts or anything like it. I need to know the low, I need to know the high, and how the price unfolds during the year. So again, you see how I'm just going to move the chart. And when the market got in this particular moment of the year, about 109, the only thing that the market did in euro dollar, it was just buy pressure. And it just went up and up and up and up and up. Up to where? Well, I keep moving the chart and now I have 119. Okay, so that's pretty much the entire concept about how you identify buy pressure and how you identify sell pressure. You take March as your reference, the month of March. You need to get your low and you need to get your high. Once you get your low and your high, after that you know that from the high is going to get to the low, and this is your sell area. Whenever the market goes above the high, then this is your buy area. So of course, we never sold at euro dollar once we knew that the price was about 109. Okay. Now, of course, we sold in between. You can short euro dollar. You can sell euro dollar in between, or you can sell euro dollar even in the buy area. But the thing is that you add risk into it. You add risk into it. No, it applies for stocks. I don't trade cryptocurrencies, and I have no relation with them, just because they're not approved to be an ETF, so that's not basically a good point to trade for this market. If something is not approved to be an ETF, then it's just not a, yeah, it's not a good it's not a good idea to trade it. So now, but maybe you can apply for cryptocurrencies, but I'm not quite sure. Maybe those instruments are kind of new in the market, like those, even if they have been in the market for 5 years or 10 years. But just might be careful, because maybe it's just a bubble, maybe not. We don't know that, but just make sure that you know your instruments before you apply a theory of price action. March applies for, yeah, so just make sure that you know first your instrument, and then, currencies exist since 40, when the gold pattern was broken down, back in time. That was in 45, 1945. So I'm quite sure the currencies will exist, and of course it moves the world. So yeah, this type of situation, this type of analysis, it applies for most currency, most majors. Of course, it applies for dollar CAD, euro dollar. It applies for pound dollar. Be careful with the pound though. It applies for oil. It applies for dollar yen, for the German index, and dollar Mexican peso. I'm not quite sure about the S&P, because it just has a lot of volatility, and then market areas might be broken too fast, and you don't have consistency like on currencies and the DAX, for example. And you need consistency when you trade price action, and if you're about to analyze the buy pressure and the sell pressure. It applies for Australian dollar, New Zealand dollar, and also for gold. So yeah, stocks, absolutely. No. Basically, the 4 hours chart is just for me to show you how you just realize and how to mark your price mapping before to trade any instrument. And that way you know that if you're going to sell euro dollar above 110, you must get rid of that transaction within the day, within that trading session that you are getting involved with. Okay, otherwise you know that you are trading against the market area. Let me show you that. I don't know if you would like to show you with another example of another instrument, but I'm just going to explain the ones that I trade every single day, because I'm of course more familiar. Let me show you dollar CAD and how you see the sell pressure and the buy pressure also. Of course, I'm moving towards the majors. Majors has great consistency, great intraday volume, and just to reach your profit goals of your account. And you better move just with a few instruments. You don't need to know or to trade 5 or 7 instruments. Just move yourself between 2 and 3, and no more than that. Especially if you want to scalp the market, you must be very focused, and as long as your interests are perfectly controlled, then you're gonna be fine. You don't need to open many transactions at the same time. Now let me show you dollar CAD now. I'm going to go to 4 hours. I'm going to go to, first let me just delete all of this. And 4 hours, I'm just going to see March and how March started. I need my low and I need my high first. And there we are. So this is March. And okay, March started here. Now we have the high, and I need the low of March, which is here. So that gives me 132 psychological level. We can say, yeah, 132 is fine. It's too low, 132. So we must put it 132.90, maybe 133. 133 psychological level. So this is my low and this is my high. 133 and 135 of March. Of course, March started with some sell pressure, and it went down to 133. From 133, it went up to 135. So we can say that after the market went over 135, you have a lot of buy pressure up to 130, 35.80, 37.80, and then went back to 135. It kept being below 135 and went down to 133. And here is when you need to be ready for a new a new market area. As you can see, when the market went below 133 in dollar CAD, just what it did is just keep going down and down and down. And then we got here at 124 psychological level. So what happened here with dollar CAD is this. March started and we had the low 133 and we had the high 135. Okay, but we knew that the market was buying here, so this was like the lows for the markets to buy up to 135. But we knew that we were into a sell pressure moment here, and we said, okay, well, if we're going to buy, we better be right, and we better keep the price be at about 133 at all times, because if that does never happen again, it means that the market is going to enter into a new sell area, into a new sell pressure area, and that's exactly what happens. And after that, we knew that we couldn't buy anymore. You know, the 133, it was not a buy price anymore. And then after that, what happens? It was down to 132, 131, 130, and from 130 went all the way down to 124. Okay. So again, after you go through the lows of the year, and then the market, the only thing it does is just to keep dropping and dropping and dropping and dropping, because the what could be the other scenario for dollar CAD is that the market is supposed to be above 135. You know, if the market was supposed to be about 135, then it's kind of like we saw at the euro dollar. This is like the type of 109 that we saw at the euro dollar. About 135, we could expect the price to go up to 136, 137, 138. And in fact, we saw it. But we knew, like here, but we knew that 135, it was a buyer's pressure. And below 133, it was a seller's pressure. And when most traders get stuck with their account, where most traders lose their account, they get confused, and they started trading with a very serious strategy, and they get great profit, great great result after the month, after 2 months, and then one day it just everything falls apart because you get stuck into I call the transitions area. Transitions type of area. What is a transition type of area? It's kind of like a ghost area of prices where you are trading one way and then all of a sudden the market just turns around and you go after a new market area. A new market area. And that happened with dollar CAD between 133 and 134. Because here the market was kind of like already buying a lot, and then it went down to 133, and people were like, okay, well, yeah, it's just a drawdown, right? You shouldn't be worried. But then the market turned around, and from 133, it went all the way down to the price that we have now, which is 124, right? So be careful with the transitions area because you might be very confident with your strategy, right? And then all of a sudden you're just lost in the middle of the storm and you don't know what's going on. The hedge just didn't work, and then your orders get activated with stop loss every time. And what you're not realizing is that you're in the middle of a transition type of area. The transition type of area, let me show you with euro dollar, that happened when most traders were stuck between the 108 and 109 because they were just shorting at 109, selling big time at 109 and 1010. And then what happened? This is a huge transition type of area where the market could take two sides of the market, two sides of the price. It could go for the buyers and just get a new area for the buyers and get about 110. Or yeah, it could go back to the sell pressure area and go down to 105. But until you're not certain on this transitions area, you must be out of the market. You must be out of the market and wait. Or at least just to be careful and be trading and hedging or whatever your plan have to trade with your plan B if the order just doesn't come right, So sure, let me show you, George, how that works. So this type of analysis, No, it's a good, no, that's a good question, Arnie. Okay, Arnie says that, yeah, you don't realize that it's a transition area after you face it. After you're just there, you face the fact. That is actually true. But the thing is that those areas, you already had the information from the past year. So if I go back to 2006, I know that this area was very crucial also. So it's not that you're just trading blindly on this year, 2017. You also can collect information from last year. So of course, how do I know that the market's going to start with buy pressure or sell pressure? If I'm, for example, trading in, I don't know, in March, okay? It's the 2nd of March, and I just want to start my trading, and then I go for buy, I go for sell, but I'm totally blind because I don't have the low and I don't have the high. Okay, but I know that the market is about to define the market, the first market area. I need to see if March is going to give me the buy area, or it's going to give me the sell area. I need to know the high and I need to know the low. And when I'm close to the high, close to the low, I need to know what's going to happen next. Because it's the low of March, true, but it hasn't meant anything to me. It's the low of March. That's it. It doesn't mean that I can buy blindly. It doesn't mean to me that I can just enter with long transactions every time I'm into a low, into a minimum, into a low price. Same thing when you are into a high price. It doesn't mean to you that you can sell blindly into a high price. It's just a high price. A high price can perfectly be a lower than. And we all know that that happens. So even if you don't know, if you're trading in March and you don't know your high and you don't know your low, you must just take a break when you are in the high and you are in the low, because that doesn't mean nothing to you. It means that the market give you the high and give you the low of March. It doesn't mean that's going to be the entire year within that area. Every time you're here and here, this means you must wait and be out of the market, and then wait if it is a transition type of area, the type of ghost area, the most trade gets stuck into it, and or it's not, or it's just going to behave the same and go down. It's going to behave the same and go up. Okay. Now, every time that you are into a high or a low, you must be out of the market. Out of the market doesn't mean anything, and we all know that. I'm sure that we all been through that once in your lifetime of a trading. Yeah, and like you're in the low, you're in the high. All the indicators give you overbought, oversold situation, and moving averages, and all the indicators give you, yeah, time to buy, time to sell, and whatever. And then all of a sudden, all the indicators, what happened? They just reaccommodate themselves, and they tell you, you know what? This is the beginning of a new area. This is the beginning of a new type of sell pressure area or buy pressure area. Now, in terms of a long-term strategy, I'm going to explain now a little bit how you see and how can you realize when it's time for a reversal type of area. We all know that June and July are 2 months of correction of the year. June, July, the market always corrects for index, for stocks, for currencies, for everything, for gold, for oil. June, July, the market corrects. So it means that we start in August now, and it means that if dollar CAD is into a sell pressure area, right? And we have now 124 already set up here. This could be the minimum price for the new start of the market to keep going up and up and up. So that means, and I told to my people today at the trading session, if today the market closes above 125, we could be in the exact scenario for a transition of a new starting area or the new buyers, strong buyers, that will take the price of dollar CAD into 126, 127, 128, until 130, maybe 133. Maybe 133. So if that happens, then we're going to keep seeing that buy pressure type of behavior at dollar CAD for the next 2 months. Okay, so that's going to happen August, September, October, maybe up to October. So we will see for the next 3 months dollar CAD just going up. Yeah. Sure. I mean, it could apply for oil, but yeah, oil, the thing is, it's quite easy to see oil in terms of buy pressure and sell pressure. We all know that the 50 is the, 50 is the price that it goes for buyers, above 150 and sellers below 150. So we knew that 50 it was the balance, the let's say balance price to say, okay, below 50, make sure you don't have any long transaction. Below 50, whenever you're in 50, you don't have to have any buy transaction. You can buy, yes, but you must know that below 50, it's a sellers. The sellers are owning the area, not the buyers. Okay, the sellers. Once you're above 150, the buy pressure, it gets bigger, and more importantly, it could get up to 52, 53, 55, 57, and on and on. But below 50, the sellers are in the area. So what happens between 49 and 50? Well, be careful, because you might be buying from the lows. So from 43 or 42, you might be buying perfectly, because you're saying, okay, well, here's the lows. I know my lows. I know I can buy. Great. But then you're stuck to that strategy, and then, you know, the sellers, once you are into a sell type of pressure area, the sellers are just going to get really aggressive, you know. So if you buy, do it carefully. Now we are now below 50, and what may happen now, that is a huge take profit situation of the long transaction for crude oil, and it's going to drop big time. We don't know down to where, but we know that below 50, the sellers get really aggressive, and it could get down big time now. So that may happen this week. So from now and Friday, market and oil, it may have a huge reversal type of situation and gave us just sell opportunities. Just sell opportunities. And what happened if you're stuck? I'm just going to go back to 1 hour. What happened if you're stuck with the buy transaction? Because you were trading and buying, and you were lucky for the last, I don't know, four weeks, and you're, you know, just right here, right? And then you got stuck with a transaction on 50, and you're like, okay, great, we're over 50 now. I'm going to buy it up to 52 now. But 50, between 50 and 49 is a ghost area, it's a transition area. It might take you to a buy pressure, but it might take you also to the sell pressure again. And it's only going to go down, oil, from now on, right? So yeah, this is not a recommendation, what I'm saying. Don't take it as a recommendation, but this is the type of behavior that happen every year. After June, July, you have the market corrections. So market's going to start correcting big time. Also for euro dollar. But for euro dollar today, it was quite interesting, because I told to my people, my traders today, well, if the market closes below 118, we are back, and then the market's going to keep shorting. It's going to keep selling. But then the market, you know, it couldn't make it. It didn't close below 118. So we short today at the euro dollar, and let me show you what we did today. We basically short euro dollar from, it was not quite interesting, the range, but it was just down to here, you know. But then I said, okay, well, we saw here down to here. That was our intraday entry, no? And then I said, okay, well, be careful, because this might not be the low of the day. And if the market cannot make it and keep the price below 118, it doesn't mean that the market is going to correct. Below 118, yes, it's going to go after 117, 116, 114, and so on. But it couldn't make it. So for us, euro dollar is still into a buy pressure type of situation, and you cannot short, you cannot sell. You're about 118. You know, so the market could keep going up. It could go through the highs and keep raising. It could totally go through the highs, absolutely. So that's one of the reasons why you must, every time that you are into a transition type of situation, you just must wait and see what happens. How you trade into such an important high at the euro dollar? Well, it's quite easy. If you are into such important high area, you just wait for the price to go through the highs. So if you're going to go long, then you trade long after the price gets exactly above 118.40, and that's it. You go high from there, right? And then when you go short, well, this is a transition area, so you're not going to short euro dollar into buy pressure area. Rule number one. Rule number 2, you don't go short if the price is above one psychological level, the 118. The price must be below 118 if you want to short. It's that simple. Those are the two golden rules when you are in the highs and you are with the lows. When you are in the highs, you trade above the high. When you are in the lows, like dollar yen, for example, that you are in the lows, you trade below the lows. And if you want to go the opposite direction, that means against the pressure of the area, because if you want to buy euro dollar, you're exactly at the favor, you're in favor of the pressure area. Market is buying, the area for buyers. So if you want to buy, it's okay, you're in favor of the area. If you want to sell dollar yen, it's fine. You're like exactly at the same level of the pressure of the area. People are selling, then you sell. But when you want to have a strategy and to short and to sell into a buy pressure area, you be careful with the psychological levels. Be careful with psychological levels. That's huge. So if we were planning to sell euro dollar, we knew that we were not able to sell above 118. We must wait for the price to be exactly below 118 to sell. This is our target. Today, at this price here, it was our target of the day, the 1793. So basically, it was a short transaction down to here. But we never kept this sale transaction. We never kept a floating sale here. Every time we trade, and I said, be careful because we're about to enter with a sale transaction into a high pressure area. We're exactly at 118. This is our target. So you better close that sale transaction whenever you can. You know, I mean, you got to the target. It's not that you just sell and then we don't know down to where. But we know down to where we're going to close the sale transaction. And I tell my traders down to where. What is that target? Okay. But then I said, do not keep that sale transaction. Do not keep the sale transaction. We're against the area. We add a lot of risk here. And this type of transaction, the risk is high. But when we buy, the risk is low because we exactly, buying by pressure. If you sell at buy pressure, you add risk. And that's happened every time. Yeah, exactly. So that happens every time. When you trade against the pressure of the area, you must be careful because you add risk into your entry. If you trade in favor of the area, then you don't add risk, you're in favor, so you can add risk, in fact. You can add some more lots in there. Now, yeah, you can also trade with DAX in the same way. Let me show you DAX how it works. You just do the same. I'm just going to delete all these price lines. And then I go for hours, back in time, go to March, and see how much started for DAX. Okay, so let me get a little bit smaller just to gain some perspective. Okay, so we are exactly here. I need to take my low. My low is psychological level. It's not precise, right? You need psychological level. And that will give you around 11,900. Okay, so the lows at the DAX, that will be 11,900, and I need my high now. 11,900, I need my high, and I got it here, which is 12,300, 12,300. Okay, so this is a transition area here, quite obvious, because the market went up to here and then went down. After it goes through it, it went out to 1200, 300, 265. Okay, so I have my low and I have my high, and you go through the year. So I never went back to 11,900. That's quite easy to see. No. The futures, I mean, the futures of the dollars or the futures of any other type of instruments, you're not really, you're not really care. I mean, it's not that you don't care, but if you trade CFDs, you just go for the price, right? You're just a short-term trader. You enter and exit within 15 or 20 minutes. So you don't really are affected by the futures of the price. Once you know the mapping of your instrument, that's all you need, right? That's all you need. You need your low, you need your high, you need to know your transitions area, you need to know when you're at risk, when you can put some more risk. Of course, if you are in favor of the area or if you are against the area. And that's it. So let me go ahead and go for now. We are 12,355. and from there we go up to 12,800, 12,800, 12,800, 12,800, go drop back to 12,355, and from there it goes down to here, and never go back to 11,800. Okay, so it's very easy to understand the German index as we saw. Now, what's going on with the German index? First, market is below the 12,365 or 12,350. That means buyers are not strong here, The buyers attacks here and get the price all this way and maybe up to here. So first conclusion, if I want to buy DAX, I must be careful. I'm against the pressure. It doesn't mean that I'm below 11,900, but it means that the buyers are not taking control of the area. So if I'm thinking on DAX and I'm below 12,350, 12,360, then I must think into sale. Yeah, well, basically you put it from the MT4 and then you just put it in your chart. But that's okay. If you need to know more about price mapping, let me take you to the link for price mapping. You go to the channel and you find here, I have an introduction for price mapping, and that will explain you how you do it. Here, how to do your map price, right here. And that's going to help you to understand how I came up with those lines. Okay, so now it's quite easy to see how DAX works. Now I'm going to go see 1 hour at the DAX and to see how can I help you to trade with the ranges from now on. So again, now I know that the buyers are not in the area. They're just the sellers. Sellers are taking care of the area. And another thing is that you are into the highs, right? You're into the highs, but you are below 12,360, so you cannot basically buy, but you can sell. But if you sell, you need to wait for retracement. And what that means is this, that in order to sell the German index, you need to identify your sale prices. What are your sale prices at the German index? And I can tell you right away. The sale prices of the DAX index are right. One important one is here. It's here. And then you have another important sell price down below here. It's actually right here. There. And then you have another sell price, important one down here. And that will be it. Once you are in this area, it's a transition type of situation because the market could either go up or could take you to the lows. And you cannot trade in the lows. I mean, you can trade in the lows, but the way to trade in the lows, you better place a sell stop. I just explained it, how I identify the buy area and the sell area, the DAX. I just said it. I don't know. It was too fast, maybe? Well, this is all recorded, so if you need the recording, then one of our country managers will contact you, and then they contact you and they'll send you more tutorials depending on your trading level. They'll, help you out with everything. So that's going to be good for you. And if you want the recording, they can sell you as well. They can send you that. Now, let me first, before we're finished, let me share with you the live trading webinars. Because of course to explain the market areas when the market is there is so easy, right? Yeah, of course, it makes sense. But the real challenge here is to live trade this, to do live trading, right? And live trading is a real challenge for us. And of course, everybody sees my trading, and that's the concept of watch my trading, and that's the entire concept of it. So I just shared with you the live trading link, and there I'm going to show you exactly how do you recognize an entry, how you see when the price is to buy, when the price is to sell, and that's it. That's all you need to know. And of course, it's important to know your entry point, but also very important to know your exit point, right? It's both things important there. You can Google the pivot point daily, and then you install it in MT4. The MT4 is, I believe, the only one that you can actually put an indicator. Most of the indicators. No. Well, you have it there. Yeah, on that one you have it. Sure, you have it there as well. So I don't know if you got the link. So if you get, yeah, if you get to that link, that's when I trade, and I'll show you Monday to Fridays what I do and how I read the prices and what do you need to analyze your entry before your entry, your exit, and how to identify a good opportunity, because maybe you can identify a price, but it's just not a good opportunity, so you cannot take that entry. And when is the moment to see if you can add risk or you need to go lower with the risk. So there's those, both ways in this market. If you trade the opposite of your pressure area, you go easy with the loss. If you are in favor of the pressure of the area, then you can go higher with the risk. And that's huge for you to know. Yes, absolutely. So now for DAX, this is the well, for euro, you can keep both. If you have a buy and a sell, you can keep both at the moment. I better close the buy if you can. Yes, you better get out of the buy transaction for the euro dollar and wait for the sale, because you're close to the highs, and if you're close to the highs, you better don't keep a buy transaction there. Yes, it applies for dollar Mexican peso. It applies for many miners as well. So for DAX, how it works here is this: the sell prices that I mentioned you as all this and all this that you see here. This is sell price, a sell price, a sell price, and this is the area for the lows. And this is when you must be careful. Okay. Now, what is the market of the DAX in this? Never goes down and never goes to the next sale price, and it keeps going up. It means that you're going to be selling every time? No, it means that the DAX is gaining some buy pressure. So it doesn't mean that because you are into a sell pressure area, you just need to sell blindly. No, because may get over your high, and then you have buy opportunity. Just it's a buy opportunity, and you need to know that you are into a sell pressure type of situation. So when that happens, you better trade through the highs. That means that with the German index, you must buy only if the price goes through the 12,294. And if that happens, you buy up to 12,316. Okay, that is your buy opportunity there. And what if it goes through 12,316? Well, the DAX can go up to 12. We have some more information here of the price. It might go up to here. So if you are into the sell pressure type of area, it doesn't mean that you're going to sell blindly. It means that you must be careful and you must trade through the highs, every time through the highs. You wait for the high and you buy, target. You wait for the high, you buy, target. You wait for the high, you buy, target, and that's it. Okay, until the market stops buying, and then all the sellers start getting in the market, right? Exactly. So that will be it. Now, well, time to close here. Thank you so much for your participation here, and I really hope I could add some little bit of knowledge at your trading. And well, this is what's been working for me for the last I don't know 7 years, until I learned. I was like losing so much my first, I could say, year and a half, until I recovered all of it. But at first, I know, and I've been in your situation if you're coming from some losses. But trust me that price action and to identify when you can add risk and when you cannot add risk will help you a lot to adapt and defend yourself of the market. Alrighty. Thank you very much for you. Yes, absolutely. You have a great day. Thank you.